Good morning, good morning, good morning. It's finally Monday. The weekend has blown by far too rapidly. Um, it is the morning blast for myself and Mr. Michael Brown. It is also Monday, the 28th of July. How July has got past us already, I have no idea. As usual, myself and Michael will be giving you a review of what happened on Friday, what happened over the weekend news-wise, and what to look forward to this week, especially as it's Monday, a bit of a bumper show as we cover all through the week with what economic data and such like is coming out. But before we do, I will get the legals out the way. Nothing discussed on the Spaces session constitute trader or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Mr. Michael Brown, how are you, my dear friend?
Yeah, very good morning to you, Ryan. Good morning, everyone. Happy Monday. Here we go again, and a well and truly bumper week lies ahead.
Yes, quite. And potentially some quite significant headline risk as well, I would imagine.
Yes, indeed. Actually, well, we might as well get straight into it because we've already had plenty of headlines as the new trading week gets underway. Most of those, of course, stemming from the US-EU trade talks, which took place at Turnberry over the weekend. Of course, the headline-grabbing measure is that the US and EU have indeed agreed on a trade deal. Of course, according to Trump, this is the biggest deal ever reached in the history of ever, presumably. I'll leave you to judge whether or not that is true. In terms of the specifics of this deal, bear in mind that again, nothing has been written
Sorry,
down.
just briefly, we need to be very careful calling it a deal because nothing is signed off yet. It's basically the word deal is being used, but it's still very clear that they've agreed. Maybe you could argue quite solidly agreed, but still, no doubt, it's just agreed a framework. It's a very, very strong framework, perhaps, but there's no signed deal or anything yet. We've had the French, one of the French ministers coming out this morning say there's still a long way to go. This could take weeks or months to get over the line.
Yes, I do agree with that, although I think everyone, including myself, is using the word deal as a sort of catch-all here. I mean, it's the same with basically all of them, even the UK quote unquote deal, and we
Yeah,
don't actually
no,
have
no,
that
no.
written down. So
I'm,
a
I'm,
valid point, but
I'm happy to call it a deal once we've cleared that up. But this just makes sure that everyone understands that we are aware that nothing has actually been signed off yet.
no, that's very fair. It's also shorthand because otherwise this show would be about 3 hours long, and it's already long
Absolutely,
enough as it is. Um,
absolutely.
Anyway, in terms of the terms of this deal, it's a 15% tariff that will be levied on EU goods going into the United States. Importantly, that includes automobiles as well. Of course, there had been a lot of worries in the European auto sector around whether they would be subject to a higher levy. Stellantis warning on the costs of that last week. That is not the case. They have got a carve out from those sectoral tariffs. So autos will be at 15%. The EU have also agreed to buy $750 billion worth of energy products from the United States. I believe that this is 750 billion spread over the remainder of Trump's second term in office, although again, the specifics on that are a little bit loose, so do take that with potentially a bit of a pinch of salt. Apparently the EU have also agreed to buy, I quote, a vast amount of military equipment from the United States. Well, dare I say they were probably going to do that anyway, given how much they've been ramping up defence spending in the bloc. And the EU will also be apparently investing $600 billion more than they previously committed to in the United States. On the flip side of that, the European Union have apparently agreed to open up trade at a 0% tariff with countries within the bloc. Now, there have been a few people running around on the internet this morning. I don't want to slag them off too much, but basically very academic and bookish economists saying, why the hell have the EU agreed to a tariff at 15%? Well, the short answer is because if they didn't, the tariff could be 30% or it could be 50%. So you can run around moaning about the deal and complaining that the EU didn't get their act together and that, they should have fought it and all the rest of it. But actually, the facts are von der Leyen is sat there at Turnberry going, you either take 15% and swallow a bit of pride and use that as a framework to potentially negotiate carve outs and such like further down the line, or you try and take the moral high ground and you go, actually, no, we're not going to do this deal. We're not going to effectively surrender to what Trump wants. And you get tariffed at 30 or 50 or God knows
Yeah,
however high
yeah.
a percent
I was
and you
about to
kill your
say.
economy.
I was about to say what you're saying there is von der Leyen saying that to herself, not to Trump.
No, absolutely. Yeah. So all of these people going, why have the EU agreed to it? Basically, it was the best they had on offer.
Yeah.
If they didn't agree to it, they're going to be in a hell of a lot worse situation. Yes,
And
6 months ago, if you just said the EU are getting 15% tariffs, you'd be like, what the fuck? But now it's basically the best they can hope for.
well, yeah, exactly. And this is why I think, we've seen the French ministers. I guarantee at some point today we'll see some German ministers coming out and saying, hang on a second, we could have done a lot better than this, because we know that they've been on the back of the EU saying that they want, them to be a bit more kind of um, concentrated in what demands they're asking for, is therefore they can be a bit more aggressive,
Mm,
as opposed to a blanket, a bit wishy-washy. So I do think it's a bit harsh for these ministers of the individual nations to be kind of hitting on this deal already, when they need to understand that, look, you have no idea what Trump's kind of playing at. And also, if they weren't in the room at the same time as von der Leyen and Trump, then there's limited scope to understand what was actually being said in there. But you're
mm.
right, and I think this is why we will see this. Yes, it's a framework. Yes, unquote, unquote, a deal in the loosest possible terms. But I think we're going to see a lot of backwards and forwards. Maybe just within the bloc, even just kind of where the Germany and France, especially, looking for carve outs and trying to push von der Leyen to get a better deal and squeeze where they can. But it'd be an interesting one. It's definitely not over.
No, and I think that probably goes for all of these trade deals, to be honest. But the big,
Absolutely,
the
absolutely.
most important takeaway for financial markets, I think, is firstly the big risks, the big no deal risks were Japan and Europe. They are now both effectively as good as resolved for the time being, and we can remove that tail risk outcome on Friday of a 25% tariff on Japan and a 30% tariff on Europe. There are still the issues of Canada and Mexico to be resolved, and of course a whole host of other potential trade deals in the mix too. But that explains why we saw a gap higher in the euro at the open, although that has faded somewhat, and also a decent move higher in equities as the new trading week gets underway. Plenty of other trade headlines to get through as well this morning. Of course, the other big one is US China. The South China Morning Post citing sources yesterday, noting that in these talks taking place in Stockholm today and tomorrow, China and the US are likely to extend their present trade truce and tariff pause by another 90 days. Colour me absolutely shocked. Who on earth saw that news coming? Of course, that truce is currently set to expire on the 12th of August. The FT also reporting this morning, according to 8 sources familiar with the matter, they have been noting that President Trump has reportedly frozen export controls in order to secure a trade deal with China. He's basically been instructing various departments within the Commerce Department to basically don't do anything too harsh towards China for the time being. So again, just re-emphasizing and reiterating that the tone on trade is one towards deals. It is one towards calmer heads prevailing, which is, of course, helping to underpin sentiment. A few other bits on trade just before we move on to other matters, of which there are many. Again, the South China Morning Post, I don't know when they became this oracle on tariffs, but they seem to have had quite a few scoops recently. They noted on Friday that a deal between the US and India is unlikely before August the 1st. This is again in keeping with reporting that we had from domestic Indian media last week, so not especially surprising, but don't rule out the can being kicked down the road there in some form. We also heard on Friday from President Trump. Of course, he was flying over to Scotland for his golfing trip. He said that he is considering, and I quote, rebate payments for lower income Americans. This would essentially be Trump taking some of the revenue that they are supposedly reaping from tariffs and giving that back to consumers in the United States in the form of ultimately a stimulus check, like we saw during the COVID
And you
days.
know what this is, don't you?
Well,
You know
it's
what that is?
go on.
It's inflationary.
Oh, well, yes, it is. It's also completely fucking economically illiterate. Even if you set aside the inflationary aspects of it, you put tariffs in, the consumer pays those tariffs in the form of higher prices, and then you give the consumer a check rebating a proportion of that. The easy answer here is just to change or even eliminate the tariff level. But nevertheless, the amount of admin and paperwork and potential inflation that will create boggles the mind, to be completely completely honest. I think that one is probably a non-starter, to be completely frank. In terms of other bits and bobs, as the week drew to a close, in terms of economic data, we had a whole host of sentiment figures out of Germany from the IFO Institute. All three of the metrics coming in below expectations, but all three of the metrics also coming in above where they were in the month of June. So not great, but could have been worse in terms of German economic sentiment. You'd imagine that we may see a bit of a boost in August from that trade deal that's been agreed over the
Yes.
weekend. Of course, we also had the latest durable goods orders data out of the States on Friday. Orders fell by 9.3% in June. Obviously, that's all down to aircraft. When you take aircraft out of the equation, you take defence out of the equation as well. Orders fell by 0.7% compared to the 1.7% increase that they saw in May. So not great, but not a disaster either. In terms of other headlines, Reuters, citing sources familiar with the matter, noted on Friday that OPEC Plus, is set to keep oil policy steady on Monday. Meanwhile, over at the Fed, according to CNN, I'm not entirely sure how they've sourced this, but apparently Fed Chair Powell has been telling associates and allies that there is, quote, no chance I will bow to President Trump's calls for him to resign. Powell has apparently vowed to withstand several more months of the president's continued attacks against the Fed's interest rate policy. Again, not entirely surprising and absolutely the correct thing to be doing. Powell should not be effectively becoming a lapdog to what Trump wants. Monetary policy is set independently for a reason, and I'm sure Jay Powell will continue to do that. Of course, that comes after the frankly shameful and farcical scenes that we had last week with President Trump and Jay Powell having essentially an argument in the Fed around the budget that is being used for building renovations there. A couple of other headlines from me just to wrap things up this morning. Johnny Reynolds, business secretary here in the UK, has apparently ruled out a wealth tax to deal with the perilous fiscal backdrop here in the UK. This is via the FT. Clearly that is good news, but to be honest, I'm not entirely sure I believe a word that this government says. So take that with potentially a pinch of salt. If Rachel Reeves were to go down that route, then God help us all. And lastly, a few bits and bobs of M&A news just to wrap things up for me for the time being. The New York Post reporting on Friday that Goldman Sachs are reportedly hungry to make some acquisitions. Possible targets include State Street and or Bank of New York Mellon. Of course, JP Morgan have been the one doing most of the M&A in the US banking sector of late, so it'd be interesting to see Goldman getting in on the act as well. Sticking with corporate news, Union Pacific, their deal with Northern Southern is apparently inching closer, so it looks like that has not yet been derailed. And last but by no means least, the Wall Street Journal reporting over the weekend that LVMH is reportedly in talks to sell its Marc Jacobs brand, so they'll be hoping that that deal is in the bag before too long.
Wonderful. Thank you for that, Mr. Michael Brown. So I'll just rattle off some of the overnight news headlines, over the weekend headlines from the overnight news roundup that we put out. As always, do subscribe to it on Substack. Best way to keep up to date with all the overnight news that might move markets. Obviously, we've covered the US-EU trade, quote unquote, deal quite significantly already. Just some key points on that. So it's $750 billion worth of energy products. I'm still not seeing anything on whether or not this is meant to be a year or just over a couple of years, but I'd be surprised if it is over 1 year. Plus, these things are always a bit lax on the enforcement, so I wouldn't get too caught up on that.
Well, it's like
But
all
also
those soybeans China were meant to buy back in the day.
Well, exactly that. And funny enough, part of this as well should be increased agricultural purchases by the EU. There's also meant to be 600 billion in investment in the US by the EU, but we'll see what comes out of that. And again, nothing's official until it's signed on the dotted line. Trump also did indicate that global steel and aluminium tariffs, which are currently at 50%, would remain unchanged. Meanwhile, President von der Leyen said the two had agreed a quota system that would keep tariffs lower for some EU metal exports to the US. Trump said the EU had agreed to, quote, open up their countries to trade at zero tariffs, unquote. Von der Leyen said the two had agreed to zero tariffs for certain strategic products, including aircraft and parts, something that we haven't seen mentioned by Trump. So again, seems to be more wiggle room here than many are letting on. French Trade Minister, they've already been out this morning, and Laurent Saint Martin, the French Trade Minister, said he expected the country's spirits sector to be exempted from the framework trade deal. Obviously, champagne and brandy and wine being major exports from France to the US. So he was expecting it to be cut out. The EU and the US have also not come up with that agreement so far. So again, something else to be working on. The French trade minister said he also told French Interradio that he still considers the deal as being, quote, unbalanced. So again, some murmurs in the ranks there still. US and China are expected to extend their tariff truce by another 3 months. That's according to the SCMP, as Michael said earlier. Trump said on Sunday his administration was close to reaching a trade deal with China, but gave no further details. Quote, "We are very close to a deal with China. We really sort of made a deal with China, but we'll see how that goes," unquote. So,
Christ
yeah,
almighty.
it gets worse the more you read, basically. The US has paused curbs on tech exports to China to avoid disrupting trade talks with Beijing and support Trump's efforts to secure a meeting with President Xi this year. I do believe that in Stockholm, I think this afternoon, the US and China
It
are having a
is,
chat.
yes. And
Um,
that may run through to tomorrow.
Yes, yeah, that's obviously afternoon UK time. You and Stockholm time, I guess. The
Yeah.
Trump administration will announce the results of a national security probe into imports of semiconductors in 2 weeks. That's gone to Commerce Secretary Lutnick, as President Trump suggested higher tariffs were on the horizon. So basically looking how semiconductors are moving and then what they can do about it. Macro news, China's industrial profits, they continue to fall in June. Data showed on Sunday as entrenched producer deflation put more margin pressure on businesses in the face of subdued domestic demand and lingering global trade uncertainty. The profitability of Chinese steel mills began to recover last month, with the improvement likely to accelerate in the second half of the year if the government delivers on its pledges to tackle overcapacity. Goldman Sachs, they've raised its target for Chinese stocks, citing improving prospects for China-US trade deal that would remove a key overhang for the markets. I've got to say, the one thing with China stocks is they always look like a buy, but fuck me, you do some money trying to hold on to them. But yeah, and as Michael and me have said many times in the past, do you ever actually really own China
Well,
stock?
that's exactly what I was going to say. You're
Um,
very much at the behest of whatever the CCP want to do that day, basically.
Yeah, exactly. So I'm glad, if you fancy getting investment advice off by Goldman Sachs and getting long China stocks, all the power to you. But I wouldn't be touching them
No,
with
I wouldn't do
10
it either.
I wouldn't be touching them with stolen money that I've stolen off of Michael Brown. I'll give you a clue. ECB's Cipollone said the economy is sending conflicting signals as officials wait for clarity before taking on fresh views on whether interest rates need to be lowered any further. Moving to the UK, the share of goods in total UK exports had fallen to a record low after drops in their value over the past 2 years, in a sign that Britain's shift towards services as the economy absorbs the impact of Brexit and oil price moves. That's according to the FT, so no wonder they put Brexit in there. The Aussie dollar, that's is set for further gains as the nation's biggest pension funds have have reason to boost hedging of their US assets to shield them from policy uncertainties. That's according to NABFX executives. Malaysia's central bank, they've lowered its growth projection for 2025 as it contends with the fallout from US President Trump's tariffs. Moving over to South America, Argentinian President Milei said he's chopping tariffs on Argentinian exports of meat and crops, including soybean products, to appease the country's farmers who view the libertarian leader as falling short on his free trade promises. So that'll be obviously one for Angie to talk about later in the Grain Blast. In geopolitical news, Houthi militants pledged to target ships of any company that deals with Israeli ports, escalating their military operations in a bid to increase pressure on Israel to further ease restrictions on the hunger-ravaged Gaza Strip. That's according to Bloomberg. Moving to the South China Sea, a failed campaign in Taiwan to unseat lawmakers has landed Beijing and the island's opposition new ammunition against the sitting Taiwanese president, potentially deepening a political deadlock that prevents his government from strengthening defences against China. And finally, for me, some equity headlines before I hand back to Michael. Samsung will manufacture semiconductors for Tesla in a $16.54 billion a year multi-year deal. Oh, sorry, it's not a year, that's a multi-year deal, marking a major win for the foundry business. That's according to the Wall Street Journal. Union Pacific, the railroad giant, could reach an agreement to acquire Norfolk Southern Corp, another railroad giant, and create a transcontinental rail behemoth as soon as this week. That's gone to Bloomberg. Citigroup, they are launching a new premium credit card aimed at frequent travellers, the latest salvo in a high-stakes war among banks to win over affluent customers. JP Morgan, they spooked fintech with plans to charge for access to customer data. Huawei Technology shows off an AI computing system on Saturday that one industry expert said rivals NVIDIA's most advanced offering as the Chinese technology giant seeks to capture market share in the country's growing AI sector. Taiwan chip foundries have seen a round of order cancellations for mature process chips due to weaker than expected recovery in automotive, smartphone, and networking, where inventories have been built ahead of expected US tariffs. So basically, I guess, cutting orders and just piling back into their own as stock. And finally, for me, HK Hynix raised its capex plan by 30% in response to strong demand for HMB, which is high bandwidth memory for those of you at the back.
Oh, of course.
The AI memory chips paired with NVIDIA GPUs, sorry. That's gone to the electric. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms of today and the week ahead, then, we'll knock off today first of all, but it is a very, very busy week ahead. Of course, a couple of things to bear in mind that are going on all day. Of course, those US-China trade talks in Stockholm. Also, President Trump and Prime Minister Keir Starmer are due to be meeting at Turnberry today. That is set to take place around about 12 o'clock midday London time. Also on the docket today, we have a 2 and a 5-year Treasury auction out of the United States. Bit of a compressed supply schedule this week ahead of not only the FOMC on Wednesday, but also the quarterly refunding announcement on Wednesday as well. And on that note, this afternoon or this evening, I'm not entirely sure on the exact time, I think it's about 7 or 8 p.m. London time, the Treasury will be providing their financing estimate as part of that QRA. For those who are unfamiliar with the process, the way that this works is that on the Monday, the Treasury will tell us basically how much they think they're going to need to borrow this quarter and potentially next quarter as well, and where they think their cash balance is going to lie. And then on Wednesday, they will provide the breakdown of exactly how that borrowing will be split across the Treasury curve. And I think that breakdown will be particularly interesting because, of course, Trump and Besant have been talking about ramping up issuance of T-bills. So it'll be interesting to see whether they do indeed go down that path. Just for clarity, the breakdown coming on Wednesday at 1:30 London time in the afternoon. In terms of other bits and bobs as we move through the week ahead, let's just take things day by day. Tomorrow we have the latest JOLTS job openings data out of the States. We also have consumer confidence figures from the States and a 7-year auction as well. A very, very busy earnings slate on Tuesday. And in fact, all week it is the busiest week of Q2 reporting season. Highlights on Tuesday include the likes of Boeing, UPS, Spotify, and Visa. Into Wednesday, we get the first read on Q2 GDP out of both Europe and the United States. The Eurozone economy is set to have stagnated on a quarter-on-quarter basis in the second 3 months of the year. That's largely a result of all of the tariff front-running falling out of the data. In a similar respect to the US economy, that is seen having grown by 2.4% on an annualized quarter-on-quarter basis in Q2. Again, that is up from the 0.5% decline that we saw in Q1, and that is all as a result of the tariff front-running basically being unwound from the data. So it's going to be very, very noisy and very, very messy, but of course someone will be claiming that that is the best GDP growth that anyone has ever seen.
Yeah.
Also on Wednesday, we have a policy decision due from the Bank of Canada. They are set to keep rates unchanged. We also have a policy decision due from the FOMC, where Powell and Co will be keeping rates unchanged as well, although it is likely that Governor Waller and potentially Governor Bowman both dissent in favour of a 25 basis point rate cut. We don't have any new projections due from the FOMC this time out. Instead, very much likely to see Powell reiterate and emphasise the Fed's wait-and-see approach to monetary policy going forwards. They are certainly not going to want to rock the boat before the summer break. Also on Wednesday, on the earnings front, we hear from mega-cap names Meta and Microsoft. We're also due to hear from chip makers Qualcomm, Lam Research and Arm Holdings. So a very, very busy after-hours earnings slate on Wednesday. Moving into Thursday, on the tariff front, the Federal Appeals Court in the United States, they are due to begin hearing arguments in the IEEPA tariff case. Now,
Oh, that one. Yeah, yeah.
well, exactly. For those who have forgotten what this is, This is, I think it was probably about 6 weeks or so ago now, the Court of International Trade in New York ruled that Trump did not have the authority to effectively just go around imposing tariffs however he wanted to, basically using them as a negotiating tactic. Of course, the Trump administration appealed that case, and that appeal is going to be heard on Thursday. Whichever way the appeal goes, it's going to end up in the Supreme Court at some stage in a few months' time. And also just to stress that even if Trump can't, or even if the court rules that Trump is not permitted to be putting tariffs in place under the IEEPA provision, there are at least 4, if not 5, other ways that Trump can get tariffs in place. So whether that be via Commerce Department investigations or congressional approval or whatever it may be. So it's not necessarily going to be the game changer that some think it could be. Also on Thursday, we have a policy decision due from the Bank of Japan. They are set to hold rates steady at 0.5%, although sources indicated last week that they could be ready to deliver another rate hike before year end. In terms of data on Thursday, unemployment from the Eurozone, PCE figures from the States, of course, that is the Fed's preferred inflation metric, as well as from the States, we get the latest employment cost data, jobless claims, and MNI Chicago PMI figures. And it's another busy day of earnings on Thursday as well, highlighted by mega cap names Amazon and Apple reporting after the market close. And then into Friday, of course, it is the 1st of August, which means that that is potentially, as things stand at the moment, a tariff deadline in the United States, not only in terms of all of those letters that were written at the start of the month, but also for the copper tariffs. They are due to go into effect as well. Do just bear in mind, on the letter front, Trump actually said, I think it was yesterday, that they will be sending confirmation tariff letters later this week. So that, to me, is potentially teeing up the groundwork for either different, aka lower levies, or even another extension, which you certainly wouldn't rule out, despite what Howard Lutnick was saying on the television over the weekend. Also on Friday, we get the latest flash inflation figures from the Eurozone. Headline CPI seen at 1.9%, down from a prior 2%. It is Jobs Day on Friday as well. Headline payrolls seen rising by 110,000 in July. Unemployment ticking up to 4.2%. And we also get the latest ISM manufacturing and University of Michigan sentiment figures from the States on Friday. And on the earnings front, focused on the big energy names with ExxonMobil and Chevron due to report before the open on Friday. And of course, throughout the whole week, focus will also remain on trade and geopolitical headlines as and when they break. So a very, very busy week ahead, which I'm sure is going to be quite exhausting for most of us. To end on a positive note, I think this is probably the last quote unquote proper trading week before we well and truly get into the meat of summer markets and things start to thin out quite considerably through August. But before we get there, a busy 4 or 5 days ahead.
Exactly that. And as if by magic, almost like I know what I'm talking about, whilst we've been talking, I said that it won't be long before German industry ministers, etc., start kind of getting a bit arsy about the deal. We've had the spokesman or the ambassador from the German VDMA, which that's a massive union that represents 3,600 German mechanical engineering firms employing about 1.2 million people. They've been on the wires and they've said, quote, the US and EU must not make trade agreement the new normal. And also that the EU-US trade deal will cost companies in German automotive industry billions of euros every year. So as you can see, they aren't happy about it. But Michael, thank you very much for today. I'm glad you had a lovely weekend and enjoyed yourself in Bournemouth on Friday. Listeners, thank you so much for tuning in. As always, hope you had a great weekend. If you are trading today, keep it tight. Whatever you're doing, stay safe, and we'll see you all tomorrow. Much love.
Indeed. Bye for now.